Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website, arhq.com. How do you feel about the economy these days? If we believe that things are bad, we may start cutting back and actually help bring on a recession. But if you want a solid opinion, you may not want to watch the financial news. This all happened in one day on CNBC.
I think this economy is cooking. On the whole, we have a strong economy.
This is the weakest quote-unquote bull market in the last 60 years.
All signs are incredibly positive, and we are, of course, bullish.
So, yes, we do see signs that things are weakening.
And we think we'll see a rally, maybe not in October, but definitely by year end.
And again, I want to reiterate, this isn't flipping between the channels. This is all on CNBC in the span of less than 24 hours. So who are you supposed to believe these days, and how do you help your clients make sense of all the noise that's out there?
There is. I mean, there's so much noise that is out there today, and it can lead people to make these short-term emotional mistakes. I can tell you, in my 29 years of experience, the clients who ultimately, look at things on a daily basis and watch the financial news have historically been the ones that are more short-term emotional reactions to what the market is. I know for a fact, I used to go over to my mom's house and, her and my stepdad would sit there and every time I walked in the house, there'd be Fox News on. And, I do watch Fox News, I admit that, but I watch it in little pieces. Mm-hmm. If you have that on in the background all the time, it can absolutely drive you insane, making you to make an emotional decision. In fact, I was blessed recently in the last month. I had the opportunity to go out to Yale University, and I got to listen to Professor Dr. Roger Ibbotson and also Professor Getzman from Yale. And one of the interesting things is during that interview process that I did with them is we talked about, what have they learned during their, professional career. And one example of that is with Dr. Professor Getzman. He is the professor of finance and management studies, faculty director of the International Center for Finance, and faculty director for asset management. So has an MBA for executive program as well. So somebody, who's done this for quite some time. And in fact, he was also one of the students for Dr. Ibbotson. But he did a 20-year study and looked at the study of behavioral finances. And, what he told me is that he had found that the people that watched financial news on a regular basis made more short-term poor decisions. So, the one thing I would tell you to do is, kind of turn off the financial news. We live in a society, whether it's Facebook or TikTok or TV, where there's somebody constantly in your face trying to tell you about a financial decision that you should make. And, the first thing I would tell you to do is skip to the end. Skip to the end of the video. What are they trying to sell? What's the promotion? What are they trying to do? We are a financial services firm, no doubt about it. We love to help people that are close to or in retirement time. But we believe in an educational process. We believe in kind of educating them to make, smart decisions versus a knee-jerk reaction to what the market is. And that's why I really believe that everybody needs a financial coach. Emotions can significantly impact your investment decisions and potentially hurt the financial outcomes in several ways. First of all, what you could do is you could overreact to market volatility. Emotional responses like fear and panic, they're going to lead investors to make impulsive decisions during market downturns. Selling assets at the bottom of a market decline can result in significant losses. I had a conversation earlier this year, which was somebody who had come to our event that we had talked about at a university class about retirement planning strategies. This gentleman had come in, and in October of last year, October of 2022, he had sold off of his investments because he said enough is enough. This was like 6 months later when he came in to talk to us at our office, and he had moved all of his money to a cash position. Well, the reality is if you looked at October and 6 months later, the stock market was significantly higher. So now he missed all that rally. And now he's got even a worse decision. Do I jump back in hoping that the market continues to go up, where short term it had this big rally and he already missed out on it, or it could sell off and go down? The other thing is you got to watch out. Number two is overreacting from market trends. So on the flip side, emotions have, things like greed that are associated. And what this can do is this can cause investors to ignore warning signs or dismiss the need for diversification when markets are performing well. It can lead to missed opportunities and increase risk. So here's what you're going to do, folks. Stay out of the herd, right? You want to stay out of the herd and don't follow those trends. Sometimes when everybody else is going left, and maybe a good opportunity to go right. I also tell people you don't want to be the last one left at a party either. So again, you want to be careful about chasing performance. Number three, investors who make decisions based upon the emotions may be tempted to chase the latest, hottest investments or sectors without conducting proper research. It's going to lead to buying assets at inflated prices, suffering losses, when the trends reverse. We can see this going back as the 2000 technology.com bubble burst that happened. It actually goes back to the tulip crazes, I think back in the 1600s, when the price of one tulip was more than what the salary was of a soldier for a year. So you've got to be careful about chasing performance. Number four is loss aversion. So emotions, particularly fear of losing money, can help investors be overly cautious, causing them to avoid necessary risk. This might lead them to be under-diversified and have an emphasis on low-yield, safe investments. And I believe that as you get older, it's a good idea to have safe investments, but you don't want to run out of money slowly, safely. You need to make sure that if you're not going to continue to work, that your money gets and goes to work every single day. Confirmation bias, emotional attachment is to investments that lead to confirmation bias. And that's where investors are going to seek information that support their existing beliefs and ignore contrary evidence. This can result in poor decision making and missed opportunities. Confirmation basis is probably more relevant today than it ever has been in the history. And the reason, let me give you an example. With confirmation basis, again, an investment can lead to an investor getting information that supports their existing beliefs. Mm-hmm. If I go on my phone right now and I say something like, how will technology stocks do in high interest? I'm going to automatically start to see ads because my phone listens to me. The searches that I type on the internet, they listen to me. What they do is they end up providing me evidence that's confirmation basis evidence that ultimately could, put blinders on you to avoid the reality of what could be the correct decision to make as well. Number 6 is you want to look at, sunk cost fallacy. Emotional attachment to an investment can lead you to hold on to losing positions longer than you should, hoping to recoup. So if you've ever had the thought process, I just want to get back to even, and then I'll get out. That's that sunk cost fallacy. So you need to have predetermined strategies that determine when to get in and when to get out. That's part of the process that we do here with our investment committee, meeting, looking at our investments and having those predetermined points. Impatience. We live in a world where I can watch a show on Saturday night and they solve a murder mystery within an hour, right? People today, they want to see instant gratification when it comes to their investments. And so, not getting that instant gratification can lead to impatience, frequent trading, incurring transaction costs, taxes, potential capital gains, penalties. Over trading can also lead to poor results. And number 8 is lack of discipline. So emotional decisions, they're going to deviate from your well thought out investment strategy. That lack of discipline can result in inconsistent or impulsive action. So here's what we can do at America's Retirement Headquarters. We can help you avoid making some of these emotional decisions when it comes to what financial news should I listen to. And the first thing is we're going to help you develop a plan. And when we're looking at a plan for a retiree, we're looking at a plan that's a plan designed to weather 20, 30 years. So the decisions that we're going to make are not necessarily based upon today's news, but based upon getting a plan that's well thought out with strategies and helping you stick with it. We believe in diversification with a sniper shot approach. We believe in practicing patience and letting the strategy work. We believe in keeping you informed along the way. That's like the economic summit that we recently held, where we had over 140 clients that had come out to continually stay informed about the investment decisions. We give that ongoing professional advice, working with them on a hand-on-hand basis, checking in and making sure that they have that emotional awareness. So again, if you're worried about the news and you're worried about what news you should listen to, I'd be more than happy, our team would be more than happy to sit down and have a conversation with you about your finances. If you don't want to do that, the next best thing that you could do is turn the financial news on, turn the travel channel on, and just get back to enjoying life.
That's really what it's all about. It's okay to detach and unplug now and then because, like this confirmation bias that Nolan was talking about, it's going to cloud your judgment. And at the end of the day, you're probably not going to feel great about it, and you're going to end up making some irrational decisions. So tune out the financial news. Speak with professionals who are out there, again, to educate you, to inform you, like the team at America's Retirement Headquarters, 419-794-3030. That's the phone number. The website, arhq.com. And to reiterate what Nolan said, if that's not what you want to do, put on a comedy, something else. Just detach from that and just enjoy yourself for a little bit.